Energy stocks gaining today as oil prices rebound from 15-month lows. And our next guest says there's more upside in store. Let's bring in Robert Thummel, Senior Portfolio Manager of TortoiseEcofin's. And Rob, obviously been a tough run. Natural gas had, kind of a crash. Oil has not really performed as many thought it would with China reopening and the global economy reawakening. So what's your diagnosis of the issue initially in terms of why there has been this weakness?
Yeah, no, thanks, Mike, for having me on. So I think really when you look at it, there's been a lot of uncertainty in the market. There's been a lot of discussion about are we in a recession? And now with this banking crisis, is that the triggering event that's going to actually cause this recession? And so I think if you have a recession, really commodity prices tend to trade off. And so that's really what we've seen in natural gas and oil over the past several weeks. And so now the question is how deep and how severe is it going to be? And so that's really put energy stocks in a position where there's some really good long-term and short-term opportunities for investors.
Yeah, I was going to say, I guess, are we going to be free of those looming recession fears for a while? I mean, even if we don't get one statistically, it would seem like that's going to be the psychology for a while around just all investments.
Yeah, well, the reason why we like the energy sector at Tortoise is simple, and it's this, Mike. The way to dispel or combat any uncertainty, even if it's how severe the recession is going to be, at least for companies, is generate a lot of free cash flow and reduce debt. And the energy sector across the board has really done that over the last several years and will continue into the future. It's a pretty simple formula. If you generate a lot of cash, return it back to shareholders, and reduce your debt, that, in our mind, is a pretty compelling investment opportunity, and one that investors can really get behind. Even in an uncertain environment, whether it's recession or banking crisis or any other uncertainty that's out there.
You've focused a fair bit on energy infrastructure type investments, right? Pipelines and things like that. Has there been a surge in investment in those areas to the point where, it's going to be some overcapacity down the road, or are we not there yet?
Yeah, no, that's a very good observation. So there was a lot of investment during the shale boom to build out adequate infrastructure in order to be able to transport significant amounts of increased volumes of U.S. oil and natural gas, both domestically as well as globally through exports. But that infrastructure has largely been built out. And you're right, there now is excess capacity. So that's why we really like energy infrastructure, because you can still have oil and gas volumes in the U.S. grow, which they will. But you don't have to, these companies, these energy infrastructure companies don't have to spend a lot of excess capital and CapEx. So effectively, all of the incremental cash flow goes back to the investors in the form of higher dividends or maybe potentially stock buybacks as well, which, when you look at the energy infrastructure sector, you're getting 6, 7, 8, in some cases even double-digit dividend yields, which in this environment is pretty attractive.